Is this the end of the bull run or a golden opportunity for Bitcoin investors? Hey guys, it's Keith Allen. Oh man, what a morning. What a day so far. I apologize for the delay. Been super busy, obviously checking out charts, and I had a microphone issue this morning. So we're flying sans external mic and just going live with the computer audio. I apologize if the audio is not great. Do me a favor if you would, and just let me know. Live comments are open. Live chat is open. Always love having you join me here. But please let me know if you can hear me okay, because I got no monitors here. Obviously, elephant in the room, huge correction, right? 20% dip from the all-time high. The market is obviously concerned, and maybe with just cause. But we've talked about this a lot in the past, right? I've got numerous analysis that supported exactly what we're seeing here. So we're going to talk about that, and whether this is playing out as planned, or if something could be developing that would signal the end of the bull run, or is it really just a fantastic buying opportunity? As per usual, if you're new to the stream, welcome. If you're an old school member, thanks for your continued support. Either way, do me the favor of smashing the buttons, especially hit that subscribe button up above. That's the little bell up there in the corner so you don't miss any of the future streams. The likes and shares also help me a lot, and I always enjoy engaging with you guys. So by all means, live chat is open. It always makes for a better stream when you guys contribute. Luigi, good to have you here. I take it that means that you can hear me okay. Again, I got no mic. See this? It's doing nothing at all. It's off to the side, not helping us. And it's weird for me because I can't hear, but that's okay. Not going to let that slow me down. We're going to look at what's happening in the candle charts. We're going to look at what's happening in fire charts. There's some scary looking things and there's some positive looking things. So collectively, we're going to try and draw some conclusions here of what we need to be looking at. First and foremost, the size of this correction. Let's start by sharing the candle chart, and we can look at this dip, what it means and what it could potentially mean if things develop here. I think I posted last night, maybe it was this morning, I don't know, it's all a blur. I've been doing a lot here, looking at charts over the past 24 hours. Technical analysis. For those that don't believe in technical analysis, I think I posted this morning, we can't be friends, okay? Because these are not random lines on charts. And as you can see, they've been well respected here. We've had, we're looking at the weekly chart here. If we go to the daily, we can see we've had numerous tests here at the top of this channel, and or this parallel channel, I should say. And this is the first test we've had back down here towards the bottom. This was established, and I literally drew these lines right at this time after the the so-called Trump pump off of Election Day, right? This was November 5th. That was Election Day. This was the Trump pump. We were looking for a consolidation level, any consolidation level for retrace to pull back to. It started here for just a few days. Then we broke out above this 91.5K level. And the 91.5 had been tested about a dozen times so far. And now we have finally a wick coming down to this 86K level. Why is this important? And why is this potentially a good thing? Well, as I have been expressing to you for, gosh, I mean, a long time, since certainly since the halving, which happened back in what, April, right? Bitcoin historically has had major corrections in bull markets, including post-halving cycles. And we're talking 20, 40, 50, 60%. And there's a lot of history of that. And I've shown you guys that time and time again. I could maybe just show you a couple of them at the moment. Let's see. That's not the one I was looking for. I have a series of these highlighted here someplace. Oh, here we go. Okay, let's go back and look at history. Here's one that was 31%. Here's one that was 15%. Here's one that was overlapping with the one that's 15%. What was it? 13%. Um, let's widen out. There's one 41%, 34%, 33%. You get the idea, right? I could go back through history and show you a bunch of these. The point is, it is not only is it not rare, um, it's normal and healthy to have deep corrections like this during a bull run. At least that's how it's been historically since the beginning of Bitcoin's existence. And I see no reason why that should change. Now, yes, the market dynamic does change over time, and it has, right? Maybe we don't see that 40% or more like we have seen historically. We've got more institutional interest and demand than we've ever had, and that is absorbing a lot of it here. So bottom line is, I think this is healthy. Another thing that I shared with you guys previously is, and this goes well before the election when there was all the speculation of how either candidate was going to impact the market. It was pretty clear that a Republican win was going to give Bitcoin a boost, largely because of the now current administration's stance on crypto. Obviously, Trump had done a lot of engagement in the crypto community. He had a series of NFTs. His sons are all in on crypto. And so, they've even launched their own meme coin just before he took office, which probably was not a good thing. But nonetheless, the broader picture in terms of how the regulatory environment is going to take shape is certainly much more bullish for crypto's macro outlook than it has ever been. And that remains a solid piece at this point. But at the time, I had said, and this goes back to, I don't know, September, October. If Trump won, we would likely see crypto pump followed by a correction, and the correction I've been calling for a long time that hasn't yet to materialize. This may be it. There may be more. We'll discuss that in a minute. And then I felt like it would find its footing, consolidate, and then start the next leg up. Conversely, if Harris had won, I thought we would see a dump, a market dump. I thought we would see it grind lower into support and then ultimately return to its trajectory. Either way, the final outcome is the same. Bitcoin returns to its trajectory once it finds its footing here. And where it finds that footing remains to be seen. We're testing support here at this key level here, which in terms of other confluences, if we move to the weekly chart, there is some confluence in this range here. We actually have an overshoot on the 21-week moving average, not necessarily a good thing, okay, because it could lead to more. So we would like to see this rectify or resolve, I should say, or revert back above the 21-week moving average by week's end. Now, we have a monthly close coming up here in a few days. Remember, February is a short month, so the monthly close is coming very, very soon. And I think Friday. So that always brings some volatility to it as well. And then you'll have the weekly close after that, which will be in a new month. And so it's going to be, I'm already predicting a pretty spicy weekend, unless, of course, we see guardrails come in and jam us with liquidity to suppress price. But, yesterday I told you we had seen a downtrend developing in fire charts. And today, let me show you what we see. So we had spoken previously about this stair stepping of liquidity that we had seen yesterday that kind of pushed Bitcoin price down. And now we have really a huge concentration of bid liquidity down here in this range above 85, stretching a little bit below it and laddered above it, which is exactly what you want to see. And if you look historically on these charts, we haven't seen a concentration this size in a really long time. I mean, right here, this is looking like we'll call it 70, 78, another 78. What's that? 140, 156 ish, 100 and so it's over 100 and 156 just in this orange block right here, which is pretty significant. And so, we haven't seen that in a long time. Certainly not this year. And if we go back historically, we can see that it is these deeper concentrations of liquidity that uh, help the asset find its footing. All right. So this needs to draw down here a little bit. This needs to paint, but um, as you can see, last big block like this was in January of last year. And so this is significant. And unless there's a rug pull, and there's always a risk of a rug pull in crypto, unless there's a rug pull, I do expect to see this hold at least in the short term. Now, that said, is this the end? Is this going to resolve itself straight up? Or are we going to see a retest? And I will tell you something that we need to be mindful of is that solid support tests really get validated best when there are retests of those supports. So this is our first weekly retest down to this range. And so I would let, we saw it happen many times up here and look, it didn't even hold, right? And so I would like to see another test of this line down here to give me confidence that the next leg up starts here. Because if it doesn't, we have further downside targets. And I'll start first on the daily chart. And you'll notice I do have the CME gap in here. And this is why this is important to me. The key moving averages are always targets for me in terms of technical resistance and support, right? Here we are on the daily, and it's around 81.5K. You have the CME gap in here and the trend line here. The trend line to me would be the strongest level of foundational support we could ask for. And if we were to make a correction that deep, meaning we go even deeper than we are now, then that would equate to, I mean, what we have so far is already a 21% correction. And I've been saying for a long time, we've been getting all these teeners in corrections. We need to see at least 20% to satisfy the technicians who are looking for that deep correction. And this would technically satisfy that if the market is ready for that. If not, then here's the next target. What's that? 81, 81.5, 81.6-ish, we said. Let's see what this looks like on the weekly chart because we have some other confluences in here. The CME gap just below, right? So I would say that if we were going to go as far as the 200-day moving average with the CME so close, it would almost be shameful not to fill this. And so going to the top of that gap or even the middle of that gap doesn't fill the gap. And to be clear, I'm not really a gap trader. I know a lot of you guys are. And so that's why I added this to the chart here just as a reference. And that takes us essentially, depending on when it happens, that could take us down to the trend line, which would represent a nearly a 30% correction, which is consistent with what we've seen historically. Now, we said the market dynamic has changed and evolved over the years. And with the institutional demand that we have now, maybe we don't get that full 30% correction, but you can't rule this out. Arthur Hayes put out a piece this week suggesting that we might go back to 70K. And let's talk about why that might be viable. First of all, we go back to the weekly chart and notice that the 50-week moving average is below that trend line. Not necessarily a good thing. I was liking when it was much more aligned up here back in January, but now that things are pulling back, that could take us down to that 75K level. But there's no real structural support here at that level, at least not on the weekly. Let's look at the daily and see if we have any consolidation around there. Um, there's not, there's a little bit, but not a lot that could take us to that level. All right. So, yes, some, but not as strong as others. I'd like to see this hold. If it did, in my opinion, that would be the strongest level of foundational support right here. Now, going lower, taking us down to that 69, 70K level, that's where it's really scary for me. I mean, if losing the trend line isn't scary enough, going back to this level, which was essentially resistance for years. Yes, we broke above, but we never really stayed above it in 2024. We fought for it time and time again, and it wasn't until election day that we had this breakout rally. Now, remember what I said at the beginning of this. Election day and the results after election day were largely noise and inspired by a political event. And I think that as things settle down, we'll get back to the trajectory that we were meant to be on. Now, if you look at, if we were to see a real, a full retrace, this retrace takes us to consolidation here, to this consolidation range, but it was a very brief consolidation range. The next level, again, technical support here and here, all through here is solid. And this could be magical. However, worst case scenario, if we took it back to here, that would be obviously very strong support. This is really the strongest RS flip on the chart. Okay. We attempted to RS flip 100K. We failed. We attempted to RS flip this 91.5K. And as you can see, we have failed. Now we're attempting to RS flip this 86.5K level. I think we went to 86.3. So we're attempting to RS flip this 86K level. And that's yet to be tested and validated. So this is our first tests. So keeping in mind, we're keeping our eye on this obviously very, very closely. If we break down from here, then you can't rule out any of these targets. This is obviously a higher probability than this, in my opinion, but this is certainly something that we cannot rule out. And losing this would obviously mean the end of the market, the end of the run. In terms of the memes that are polluting socials and channels today, it's probably one of the best days ever. And on that note, it's also an important day for meme coins, that asset class, because some of this nastiness we've seen in price action really has transpired since obviously there was an issue in Argentina with the Argentine president launching or allegedly launching or supporting a meme last week, and which of course he came back and denied. And, that asset class as a whole, as sad as it is that it has performed the way it has, it's made a lot of people a lot of money, but it's also costed people a lot of money. And so it has always been my desire since I started trading in this market back in 2017 to see fundamentals matter. And they haven't really mattered. And the evidence of that is that memes have been one of the most positive and profitable ways to trade here. And so I would love to see this market continue to mature and evolve so that all the Ponzi's and the memes, the things that do nothing, just kind of the market doesn't support them anymore. And they either find their own place to be traded, or they just kind of wither away and go away. And we're left with the projects that are innovative, that have utility, that actually have real use cases. And so we need to see more of that in this space. And if we don't, we've got problems. And so Bitcoin is the gold standard. always has been, and probably always will be. ETH getting absolutely hammered, as are alts, but we'll get to that in a second. I first want to show you, we talked about the Trump pump and how things have corrected since then. Here it is from election day. The market was on a big trajectory here, and that obviously has broken down. And now we have this retest of support. These are not new lines that were drawn. This is something that I've shared with you guys before. We did it last year as well. These are drawn off of quarterly opens and closes. In this instance, back to 2024, 2025. And so if we lose this, it's a long way to go to find support. As I showed you, those lines don't exist on this particular chart. We have to then go back to the my original chart and look at these levels and find those support levels. But after this level, the next level of technical support is at 81. And from there through this CME gap to the trend line. Would I be upset if this happened? Listen, nobody likes watching their portfolio shrink rapidly. So it's an uncomfortable feeling, no question about it. But it's also when the opportunities present, the biggest and best buying opportunities present themselves. Fear and greed is on the rise. I will tell you that fear and greed, historically, when it gets down around 11 is when things really get exciting. So there's in other words, there's room for more fear in this market. ETH, we talked about ETH. So ETH is getting punished. ETH coming off of, kind of a massive double top scenario, dating back to March of 2024. It has broken the trend line, broken downward. There's potential bottom support down here in a range. Initially, I was looking at kind of a double bottom here between here and here. But as I went back in history, I found that we actually have long-term, an RS flip range right here on ETH in this. This is like, 2000 to 21-ish range. So we could certainly see more degradation of ETH. ETH has not been getting ETH has been getting beat up for a long time, both in the market and in sentiment, for a number of reasons. And as are alts, right? I mean, look, Litecoin, I talked about fundamentals. Litecoin has as strong a fundamentals probably as most of the assets out there in terms of use cases. It's being used in payment platforms a lot. XRP as well. I haven't looked at XRP in a while, but Litecoin is one that I happen to like, and it's not looking great right here. The fact that it came past the 100-day moving average. Let's see what that looks like on the weekly. The weekly still intact here, and actually it looks better on the weekly because we have a golden cross coming from the 21 week moving average that we saw the 50 and the 100 unwind here, and now we're unwinding on the 200. So we could actually see a good recovery out of Litecoin from here. Which was another one I said, XRP. Let's do that on a different chart. Hang on a second. Okay. Solana I have up. Solana just getting absolutely hammered. And it's another one. Look, it's gone almost like right exactly to its prior support level. So is there more downside for Solana, or is this going to be it? These are all of the things that we're keeping an eye on. Yusuf, have I heard of AR Weave? I have not. Should I have? And why should I care? If it's the shittiest of shit coins, then no. If it's a technical pattern, enlighten me. So back to Solana here, right? I mean, this is just nasty. This is a 15% daily candle to the downside. Those tend to bounce, right? I mean, it came right to the line here. And staying above this 0.5 fib would be good, right? And then you have a chance at a nice recovery here. But you got to reclaim this trend line here, right? So if things can progress, there is going to be resistance here before a potential recovery, and that makes sense, right? It's basically going to correlate right with the 0.618 fib. Storage, not that interesting. Okay. That was from Youssef. I'll just pay that off. Okay. Anyways, what else do we? Oh, XRP. I said I would look at. Not sure why, but this is another one that at least is being utilized in cross-border payments with internationally, anyways, with banks. That's an old school trade setup. As you can see, it's basically retracing its move to, that it moved to all-time high. So will that end here at the all-time high, or will it come lower down to where things really took off from, or I don't imagine a full retracement all the way down to here. But nothing is safe, nothing is spared, and a death cross here between the 21 and the 50-day moving average. Not looking great here. I expect more downside out of XRP. And quite frankly, alts are going to take the brunt of this. I've been sharing with you guys a chart here for the past, month or so, looking at dominances between the various assets. And this one illustrates exactly what's happening with Total 3. This is all assets minus Bitcoin and ETH. You can see Bitcoin dominance. That's the orange one here that is now moving down to its support RS flip line. And USDT's dominance is soaring. Okay, so this is an indication that we're in a risk-off environment. People are trying to figure it out. So they're flocking to safety in USDT and USDC or USD until things settle down. Things will eventually settle down, but this is the uncertainty right here, and we can see it happening. It's reflected in both the dominances and the prices of all the assets in the market, right? This is a market-wide sell-off happening right here. So let's now go back to fire charts and see if this thing is going to recover anytime soon, or if we could see more downside. This is not what you want to see. That's a rug pull right there, my friends. And that means more. This literally just happened. That's kind of scary. That means more opportunity for downside, and you might want to shore up your risk management here. Where did it go? Did it move? It did not. It does not appear to have really moved. Maybe some of it moved down here to this 82K level, but I think this indicates that we're going to see a deeper correction, and now potentially we could go down to this 200 moving average and potentially gap fill from there. That's a lot to digest. That is not something that I wanted to see, and so I'm going to leave you with that parting shot here. The good news is there's a long ladder, bid ladder, extending down towards that 70K range. And, I think that this is still an opportunity for a lot of people here. So if you are of the mindset that Bitcoin has not seen its all-time high, this is a dollar cost averaging opportunity for you. If you are needing the money that you have in trading right now, this is a warning that you want to protect your portfolio. And with that, I'm going to leave it there, guys. I'm going to try and get my microphone situation sorted out here as soon as I can. In the meantime, I hope this gives you some insight to trade safe and trade smarter. If I see anything developing, I'll do my best to keep you updated throughout the day and throughout the week. Trade safe, my friends.